Joining me in studio is political analyst Tsepo Khadima. Tsepo, is always good to have you. Just the whole tug of war when it comes to state-owned entities and particularly the call for less government intervention. Is this for you the magic wand, as it were, to ensure that they are more profitable and feed into the economy?
Yeah, certainly. I think what this effectively is a manifestation of a schizophrenic approach towards policy formulation, and particularly economic policy formulation in South Africa. It's important to note that we've actually been flip-flopping on economic policy in the last 22 years. There was a time where there were advocates of a strong state interventionist approach towards economy. And then there was a time whereby it was the free market economy proponents who really were the loudest. Needless to say that we've been flip-flopping, and when you look in terms of the legislative framework, and particularly in terms of the latest being the company law, specifically the Companies Act of 2008, and how the state-owned companies are regulated, clearly you can see that schizophrenic approach manifesting there.
How do you deal with this indispensable position that asset managers find themselves, primarily if they're lending to the state and can pull the plug, as was the case with Futuregrowth?
Yeah, I've been on record and I emphasize it again. I think what government needs to do is to really take a much more firm, decisive stance on really what type of an economic policy they want to implement. And where I see it, from what I have seen and what I've analyzed, it is clearly not possible to be a purely neoliberalist economic approach. That has failed in any case. Neoliberalism has failed, which is what? Free markets, privatization, less regulation or no regulation at all. That cannot work and has not worked. The effect of it, and of course with also less spending in terms of government and everything else left to the private sector, that has not worked. What we need in South Africa is really a mixture in terms of economic policy. Yes, free markets, private enterprise, very much there, but in a regulated environment. What we are seeing now with the stance that was adopted, which is really more posturing, but very dangerous posturing, by the likes of Futuregrowth, Sasfin, Aeon, and the Danish Bank. Effectively, you have a situation whereby they are demanding a seat at the table and to be in the controls, but without having been elected. And that clearly is dangerous, because the agenda that they run from is not what the citizenry would have hoped for. What we need prescription. Currently, as we stand, National Treasury has made regulations to allow the various asset managers from retirement, savings, and otherwise to invest 25% in offshore assets. Now, when you look at that, you ask, well, what criteria? In fact, now would have been a great opportunity for them to have said, the stance that we are adopting towards South African state-owned companies, this is how it compares with the stance and the approach we take when we deploy the 25% that we are allowed in offshore assets. And I'm not so sure that they've been having actually great success in terms of the offshore portfolio that they are allowed to invest. But the result that it has had, in terms of not having prescription, in terms of where they should be deploying their assets, and more so being allowed to deploy so much more in terms of offshore portfolio. We sit now with a situation whereby, as a state, 2 trillion rand, which is 50% of our GDP, is actually in loans, sovereign loans, sovereign borrowings. But the net result of it is this: a volatile currency, high interest rate that we are paying in dollar terms, which nobody else does, the higher level of debt that we carry as a state, we're seeing there's absolutely no way that we can fight off.
There's a louder voice that tends to suggest, perhaps as the chairman of Denau was saying, that there is a concerted effort from the private sector, opposition parties lobbying, or rather a demonizing was his word, the private or state-owned entities and parastatals, rendering them ineffective and essentially a bottomless pit that needs to be bailed out all the time. So the rationale is to bring in the private sector. What is your reaction to
I agree with the statement from the chairperson of the Denel board. And I think, in fact, with the stance that they have taken, whereby they have clearly resisted all the pressure that they've been receiving, is quite the correct way to go, because it shows that they are independent. But I think also, on the other hand, what we are seeing with the asset managers, I think it's a miscalculation. I'm saying that the chickens are going to come home to roost. The question becomes, will they be ready for the day of reckoning? I don't think that they'll be ready for the day of reckoning. If you look at the trade union, for example, or ordinary workers who are invested, who these asset managers, they are managing their retirement savings and otherwise, certainly they are not deploying that capital in a responsible way. And the state-owned companies, it is important to note that actually they become that effective tool to ensure that we can clearly have a demonstrable application and implementation of the National Development Plan, which currently, by the way, we are nowhere near. We are closer to 2030, but we are nowhere near making the progress that is required. And we continue to see jobless growth. We continue to see that somebody was making a joke today, say, listen, you've got all the shopping malls opening, but there hasn't been other economic infrastructure, be it in rail, ports, harbors, and otherwise, which is what is, in fact, important, and also in the productive sectors. So clearly the stance that is taken by the asset managers, I think what Asisa should do, and what Asisa needed to do more than just distance themselves from the statements and the letter soliciting other fund managers to follow suit with future growth. They need not only stop at that. They actually need to be taking disciplinary measures against future growth in terms of their stance. But also the Competition Commission. The Competition Commission, unfortunately, is failing us once again, as we saw what they did with the matter of the banks, taking unlawful action against Oak Bay accounts. In this case, again, they are failing us by being quiet and by not taking the necessary action, because clearly, from what we've seen, the law has been broken.
All right, thanks so much, Sepo, as always, for your insight and making time for us. That's Sepo Khadima, a political analyst, just reacting on the latest from Asisa, the Savings and Investment Association, regarding Futuregrowth's alleged lobbying of other asset managers against state-owned entities. Now on to other stories.